Good evening, friends, traders. Today, I have brought up one powerful trading setup for consistent profits. That is first pullback strategy. What is pullback strategy? The first pullback strategy is a highly predictable pattern that appears in almost every trade setup. Here is how it works. First point is trend reversal begins. You might have seen in the market is continuously falling and then it starts reversing. So imagine the market is in a downtrend but then starts reversing into an uptrend. That is the first step. Second is the pullback. Instead of a straight V-shaped reversal, the price makes a small pullback before continuing higher. Third is the continuation of the trend. After this pullback, the price resumes its new trend direction. This is the pullback strategy. Why does the first pullback strategy work? The key reason for this strategy is so effective because of the risk to reward ratio. Because how many times you might have seen, all of a sudden the market will be in a range, price will be in a range, suddenly it pops up, and if you try to enter into the market by seeing the breakout, then you will end up in losses. The problem with entering at the highs, let us say you see a reversal and decide to enter immediately at the highest point of the new trend, this can be risky because the price could pull back, stopping you out. Yes, you will be stopped out. How many times you might have seen after a big bull bar and the price starts coming down, right? So if you enter at the high of that bull bar, you will be stopped out. Not only stopped out, and your stop loss will be very high. If you use a wide stop loss, your losses could be much bigger if the trend fails. Why entering on the first pullback is better? Waiting for the first pullback gives you a better price entry. Number one, you get a tighter stop loss, that is very minimal stop loss. This reduces your potential losses even if the trade goes against you. And next thing is higher profit potential. You enter at a better price, increasing your risk to reward ratio. Third thing, you are getting a confirmation of that trend strength if the price bounces from the pullback. It confirms the trend is strong. These are the things. So, this is very, very important. Entering on the first pullback. How to trade the first pullback strategy, step by step, I'm going to tell you. To trade this strategy successfully, you need to accurately identify a trend reversal. See, you must all must be knowing what is uptrend, what is downtrend. Uptrend has the quality of making higher highs and higher lows. Downtrend, lower highs and lower lows. So valid trend break happens. How it happens? A valid low or high must break for a true trend reversal to happen. That I am going to show it to you on the chart. You just listen to me These are the steps. Avoid confusion. If the price breaks a previous low, it doesn't necessarily mean the trend has reversed. That also I am going to show it to you on the chart. A valid reversal only happens when the price breaks a valid structure level and closes beyond it. So many people have confusion. Many beginners cannot identify the trend because the market is very fractal. Even simply drawing higher highs, higher lows, in between, minor structure, internal structure will be there, and people fail to identify the internal structure. That is the problem with the beginners. So, for avoid confusion, I am going to explain it to you on the chart, everything. Entering at the first pullback, once you have identified a trend reversal, you need to find where the first pullback will form. There, this is where Fibonacci levels come into play. Wait for the price to start pulling back. See, after the breakout, you wait for the price to pull back and use the Fibonacci tool. Draw it from the swing high to the swing low. So you have seen a big bar, breakout bar, and when it starts reversing, so draw it from the high to low, from where it has break of structure has shown. That is very important. Look for price reactions at the golden ratio, 0.5 or 0.618 levels. So important rules are, if price reacts at 0.5 or 0.618, there you look for confirmation. What sort of confirmation? You need to look for reaction of the candle. If there should be a pin bar, hammer formation, or bullish bars. The reversal candlestick patterns, you need to see for that. If there is no, so you need to wait for the next opportunity. Step 3 is confirmation and trade execution. Once the price reacts to Fibonacci levels, you need strong confirmation before entering. That's what I explained it to you in. Look for a strong candlestick pattern like bullish or bearish engulfing candle. Enter the trade at the close of the confirmation candle. You need to enter at the close of the confirmation candle. You need not hurry yourself, because let the candle close and the candle show you direction. Before that, you are not going to enter. Enter the trade at set your stop loss just above or below for buy trades the Fibonacci level. Set your take profit at 1:2. Stop loss size for a good risk to reward ratio. Key takeaways from the first pullback strategy is, always wait for a valid trend reversal before trading. Second thing, use Fibonacci levels to find the best pullback entry points. Look for a strong confirmation candlestick pattern before entering a trade. So, set stop loss, be patient, only take trades that fit the strategy. You have to see, if it starts moving below that Fibonacci levels, it doesn't hold, then skip the trade. Don't take the trade. Final thoughts about this strategy is the first pullback strategy is one of the most reliable setups for making consistent profits in trading. Yes, you can make consistent profits. It allows you to minimize losses. So you will not be tensed with the tight stop losses. Maximize gains with high risk to reward trades. And you will trade with confidence. Trade with confidence by waiting for confirmation. Okay? The final request is from my side is, if you found this helpful, be sure to like this video, subscribe to my channel, turn on the notification bell so you never miss an update. If you have questions, drop them in the comment section and I will be happy to help you people. Happy trading. Let us go to the chart. I'm going to the live chart of the crude oil here to help you people, to help the trend. I found a indicator that is pullback and retracement alert. So I'm going to the indicator section. I'm typing pullback and retracement alert by, I'm not able to pronounce it properly. Please excuse me. Taufan Ganas. So here you go and apply this indicator. Reason for this, I will explain you. This indicator is designed to identify the trend. Okay. Let me remove. See, in this indicator, let me go to the indicator and see what all they have used. In the input session, they have used MACD, smooth K and smooth D, 14 and 3, and then they have used moving average as for trends. And apart from that, they have designed to, if I go to the style, they are giving a pullback bar. If the pullback bar is identified, so you will get a color there at the bottom of the bar. And retracement bar, if you are getting a retracement bar, a red color will be there for the bar. Okay? And potential pullback, bullish doji, if you identify, there it gives a signal below the bar. You can change according to it. I have made it as a circle, plus symbol, pullback with volume increased. Volume is also important, right? And then if the pullback hammer is formed, that will give you below the bar signal. Like that, for the retracement, drastic price drop. That means with volume, if there is coming drastic price bar, then what happens is you will get an alert or a signal over there. Retracement, profit taking above bar, and a line is plotted for resistance and support. That is very, very important. So you go to the indicator section, type in pullback and retracement alert, apply on the chart and explore on your own. See, this indicator is designed for the trend identification, nothing else. Here, it is live chart of the crude oil. Today is 20th. Crude oil has started trading from here. Let me remove the indicators, remove drawings so that you can understand. See the red lines. You can see the red lines. These are the support lines. And this is the violet color line. You can see this violet color line. I hope it is visible for you. Shall I change the color? If I change the color, probably you can see better. Resistance. Let me change it to which color? Let me change it to yellow. And okay. And thickness, no, thickness I'm not able to do. Okay, let it be like that. Now you can see the color. This is the resistance, this is the support. So all of you know that if a trend is established, it makes an high, higher low, and when it moves away, trend is established. Okay? And this low becomes the valid low. Why it is valid low? Because it has created the break of structure. Break of structure is BOS. So automatically it is plotting. The price has moved away. So when price broke above that level, when it started reversing, you can see the red candle over here. Then I took the fib tool, take the fib tool from high to low. I'm applying here. Then I'm looking for the 0.5 to 0.618. Can you see here? And dozy formed over here and the price continued to the higher side. So if you would have entered here, you would have met with immediate entry would have caused losses and your stop loss will be very wide because you need to put stop loss over here from this area. So then your stop loss will be wide and you would have been stopped out. So if you would have entered at the first pullback, this is the first pullback. After the break of structure, that means trend has established. For the trend establishment, this indicator is using moving averages, 20 period, 50 period, and 100, 200. This is 200 period. They have taken care of the move. For the trend, they have taken care of with the help of the moving average. And it is automatically plotting support and resistance. So trend structure has been established in the crude oil like this. So trend has not completed. See, after the breakout of the structure, what happens, many times you might have seen the price comes up and goes down in three-wave fashion. This is what happening over here. And you must also notice this is the valid low. This is valid low, internal structure. Sometimes what happens in the market is people here after let me show it to you. Here, this is internal structure. Market goes up and it breaks below this structure. Then people will start thinking that trend has changed. Do not do that mistake because this is the valid low. Unless this is broken, then trend structure will not be changed. That is what happening in Nifty also. I will show it to you. With the help of this indicator, let me go to the Nifty. Let me type in over here, Nifty indices. Let me go to the daily chart. If I go to the daily chart, let me take out this TWAP. Only let me keep it, let me hide this TWAP. See, here in Nifty, trend has not changed. This is the support. This is the break of the structure. This is the valid low. This is internal structure. The market is slowly coming down in this, from this area to here. If I take the Fib tool here, it has retraced almost, it has gone below 0.5, 0.382, and it is almost near the 0.78. If I take it as ulta, 0.78. Till this structure, this valid low, that is 21,310 is broken, then the trend will not change in Nifty. Nifty is undergoing through correction. If it doesn't break this level, then trend is intact. Trend is intact. Now at present, you can see this violet colored things are resistance, resistance. This is the support. Support had been broken down temporarily and it had made a pullback. So you could have taken a trade around this area for the, and here you could have lower highs. It is making a lower highs. When the trend is down, what you can do is you can apply the Fib tool from top to, and you can book your profits, or you can trade up to 0.5 retracement. Now at present, what is happening in the Nifty is trying to hold this support. Hold this support. Suppose if it breaks below this area, the next level comes to 21,907. So you can also confirm by putting ulta Fib tool for 1.618, that comes to 22,032, and then first level 1.272 level is 22,452 and 22,299. Till this support is not broken, you need to carefully, because it is hugging near the support area, because still it is in downtrend. Suppose if it starts breaking below this level, 22,744, then market may go down. So this indicator, I have found this for you people to identify, to make your trade simple, to identify the structure. See, same thing happened. You are getting a hammer over here. It was coming down, retracing back, coming down, and a hammer candle has been formed at this level. and the price is above all the moving average. 20 period has crossed over the 50 period. Shorter term has crossed over the 50 period moving average, and a green color candle is formed and a signal is also formed over there. This is a beautiful indicator for you people, because many of the traders cannot identify the internal structure and break of the structure. They are not able to identify. Actually, this will help you people, and this is the first pullback strategy. This pullback strategy may be like this. It can come in this way also, unless this low is not broken, the structure is intact. The pullback may be zigzag like this, or it may be a straight pullback to 0.5 Fibonacci, 0.5 to 0.618 Fibonacci retracement. So this is a wonderful strategy. You will have consistent profits, and for your risk to reward is very, very minimal. Thank you very much, friends. Nalinakshi Swami signing off.